All right, good morning, everybody. This is Nick Webb here from Chaikin Analytics, presenting Stock Market Today on Wednesday, July 3rd, 2019. A lot of people are going to be out today, and they're going to be out on Friday, so I hope everybody has an excellent weekend. As you can see, I'm standing in one more time for Dan Russo, who is completing his honeymoon, should be back before too long. He will take the show over again on Monday, so you'll have me again on Friday. But if you do want to follow where he's going and sort of like where's Waldo, use the @DanRusso_CMT Twitter handle. Definitely give him a follow, because not only do you get some great stock tips, but you get to see some incredible food that he's having in Italy. So highly recommend. Let's turn our attention, though, to something much more important, which is what's going on with the market. Well, it broke through resistance yesterday, was lagging most of the day, and then all of a sudden, boom, it had a really nice finish. And a lot of that was in real estate, which has been a lagging sector. So just a note of caution as we go into this holiday weekend. I did mention that people are out already. There's going to be light trading today. And so what that means is it exacerbates big moves. And so you may get whipsawed a little bit today. So just be aware of that, and don't necessarily assume that a particular move in any direction, if it's dramatic, is real, because when everybody comes back on Monday, that's when everything sorts out and they sort of move back to what the right pricing is. But you might be able to find some good bargains out there if there's a little minor negative news on a particular stock and it gets hammered. That could be a good time to walk into that particular pick. Anyway, we're still trading in a narrow channel, but the moves are now definitely towards the upside. And like I said, we did break through that 29.50 resistance. That's a really good sign. I think where it goes from here is I'm going to leave that to Dan Russo when he returns on Monday. He's much smarter than I am, but it certainly looks like there's very positive momentum in this market. Couple other things, if you look at the S&P in Chaikin Analytics, you'll see that it's oversold right now. So there's some positive momentum there. The other piece of good news is that Chaikin money flow has returned to the S&P. So there's momentum in the market behind the S&P, which is great. What I was very concerned when I saw the negative Chaikin money flow as it's making new highs. We'll talk about that in regards to a particular stock later on during this show. But now that money flow has returned, that's certainly a good sign. Obviously, I'd love to see it a little stronger than that, because that'll give the market a good push. So let's take a look at what happened to the major indices yesterday. Like I said, market was sort of a down day for most of the day, and then all of a sudden it just took off towards the end. And you can see, all the large cap type indexes were up. Small caps, again, just are lagging their large cap brethren. And at some point, there's going to be some real positive momentum behind the small caps, and they've got a big game of catch up to play. One thing of note is, we had been bashing the real estate industry, our sector, for the past 5 days, because it was at the bottom of the totem pole and really I think it had dropped by over 5% over those 5 days. Yesterday, it major turnaround. I think a catalyst for that is that yields again dropped below 2%. So if you're looking at real estate, that actually changes their cost structure quite a bit, number one. Number two, a lot of the real estate investment trusts, provide a decent dividend. All of a sudden, REITs are looking at it as a pretty strong alternative to a 2% 10-year government bill or note, or bond, sorry. So all of a sudden, real estate becomes a much more viable investment. So interesting development. It really took off towards the end of the day yesterday. Or actually, I saw a lot of them take off around 11 o'clock in the morning. So So things are happening there. It'll be interesting to follow that trend for the next couple days. We already talked about what happened with the market. We talked about the Treasury yield. Already today, the futures market points to a slightly positive open, so hopefully that'll continue the nice upwards momentum that we have in the market. One thing of concern, and it didn't get a lot of press yesterday, but the U.S. has opened a new trade war front, and this time with Europe, threatening $4 billion worth of tariffs because of subsidies in the European aircraft industry. So I think we're a long way from panic here, but this is definitely not a good sign for the market. The market hates trade wars, and starting a new one while we're still embroiled in China, seems a little capricious at best. And so we're we're watching that. We're hoping that gets resolved. Market will close today at 1, so just be aware of that. We talked about this in terms of sector movements over the last 5 days. And you can see real estate is no longer in the negative. It's jettisoned a bad day 5 days ago and added a good one yesterday. And so now they're in the green. The only one left in the red is utilities. As you would expect, technology, which has been powered by the chips and semiconductors, has been just on a tear. As has the financials. They're still sort of basking in the glow of the Fed report cards. I do think, though, that the flattened or saggy yield curve is going to be a concern for banks at some point in the near future as people pay attention to that. Hard for them to make money in their core business when, borrowing short and lending long isn't really that profitable. So our industry focus today, yesterday was health equipment services, today is health care services, just to make sure that you didn't think we were having a repeat. This is, again, a fairly strong industry. It's ranked number 11, but it has 9 bullish stocks to 5 bearish. It has underperformed the S&P by 12 or almost 13%. So not a strong performer, but as you know, Chaikin Power Gauge is a forward-looking measure. So 9 to 5, decent ratio. And so there should be some good movement in this ETF or industry in the future. Let's take a look at Select Medical. Didn't really know a lot about them, but let's read the chart the way that Baseline reads the chart. Start up in the top left corner and see it's very bullish. Go down to the power bar. You can see we've only turned bullish on this stock really in June of this year. So we like it as of June. What's interesting is all of a sudden the relative strength is coming in, and you can see it just has creased into the positive where it's outperforming the market. Now, we call that at Chaikin a personality change, and when there's confirmation of it, if it's persistent for a while, then that's a really good sign. That's a sign that this stock might have some momentum and be able to run. Additionally, we'd love to see the real powerful build in Chaikin money flow. That means smart money is coming into this stock. So net, great looking stock. You look at the overbought, oversold, probably not a bad time to get into the stock. And so just a great looking stock overall. So on to the next one, stock of the day. Well, we picked a big one this time, Oracle Corporation. Now, this is where I wanted to point out, look, it had a terrific earnings just, a couple weeks ago, and it's been just on a tear ever since, and it's now trading over 58. But take a look at the money flow. When a stock is making a new 52-week high and Chaikin money flow is that heavily in the red, what that tells you is that smart money is taking profits out of this stock. It's taking advantage of the positive news, taking profits. That's not a good recipe for a long-term continuation of this momentum. So this is a stock that, even though it's very bullish and it's got all the great underpinnings, if you look over the left, good financials, good earnings, good technicals, experts so-so on it. even though all that's true, I just worry with this really negative chicken money flow that it's not going to have the wind under its sails to keep this going. So stock to watch in the future. So what happened yesterday in the market? Who were the winners? Who were the losers? Real estate, there were a number of firms that took off. And so, you know, if you look at HCP and Wells and IRM, all those are real estate firms. And just, you know, they're going up with the sector. It does show the power of sector rotation. When real estate all of a sudden comes back in favor, the whole industry is brought along. One thing to like about HCP is they're going through a process, very smartly taking advantage of the lower interest rates, and they've been refinancing their debt in such a way that their interest rates are coming down by 3/4 of a point. Doesn't sound like much, but that's about roughly 25% of their interest expense is going to be lowered because of this. So some shrewd maneuvering on their part. Over on the loser side, again, it's just a sector rotation. You've got Apache Energy, you've got Energy Resources, you've got Marathon, you've got Diamondback, which is using the FANG term, and you've got Devon Energy. So again, energy stocks, right towards the end of the session, there was really a huge negative move on oil prices, and all these stocks went down. And so it's just, boom, a complete rotation. That is the story of what was moving the market yesterday. So we noted that there's not a lot of earnings going on, but one that did report, probably wish that they had a number of other companies reporting at the same time, was Acuity Brands. I just remember when I had a bad paper or something, you know, I'd come home from elementary school and I tried to fit it into, you know, all my sister's work so that, you know, they had all the good grades, and then they would look at mine and they would still be happy because, you know, my sisters had gotten the good report cards. Acuity actually met earnings. They met the estimates. But in a world where the market is trading at a very high PE and estimates have been brought down over time, we've talked about this, meeting estimates is no longer adequate. It's gonna, you know, if you meet estimates, it's actually like you've missed the estimate. And so it's like an earnings, not a beat, but a loss. And that was true with Acuity. Literally, the minute the estimates came out, or the earnings came out, the market started punishing Acuity, and it went on all day. So that is a good indication of what to look forward to in earnings season. You really have to have all your ducks lined up when you're reporting earnings. There are no reports today, so it'll be a quiet day in the market. Again, probably a good thing given that it closes at 1. Couple bonus charts. US dollar is, it sort of was looking concerned, and it had a real slide there for a while. But as the trade sort of war with China let up a little bit, and the Fed has backed off easing a little bit, the dollar has come back. So, you know, again, Friday's earnings report is going to, our employment report is going to be really important to the continuation of this. And we talked about the saggy yield curve. It continues. The 10-year in particular, really the yields on that took a dive yesterday. So for anybody out there that has a mortgage, this is a great time to think about refinancing, because usually mortgages are based on the 10-year, and it's sitting under 2%. So I'm seeing, you know, mortgage rates that are just unbelievably attractive out there. But, you know, this is a stock market show, so we'll bring it back. Just thank you again. Have a great 4th of July. This is Nick Webb. I'll be back in on Friday, and then Dan will return.